Let's take a broader look at the markets. We're joined by Mark Sebastian, founder of Option Pit and Chief Investment Officer at Karman Line Capital. Always great to see you. Thanks very much indeed for joining us. You think that the reopening of the U.S. government is significant. Why is that?
Well, I mean, think about what's been held up. We haven't gotten any real data outside of CPI in 2 months. The closest thing we've had to a jobs report was ADP. That's been mixed. So there's the one piece of like real economic uncertainty that we have out there has been our lack of any real look at labor statistics. And, you know, we've heard of these ancillary stories about the U.S. economy softening up. Now we've got an opportunity to look at it. In addition, it's just the coffers. The amount of money the U.S. government spends, I know you know this, Andrew, it's just... It boggles the mind if you sit down and think about it. It is the single largest buyer of everything in the United States. As big as Mag 7 is, the U.S. government is bigger. So for them to be borderline inactive, it is going to have a palpable effect on the economy. And you saw U.S. markets on Monday reacting really positively to the news that the government was opening.
A lot of people hold stocks in America. Of course, it's the wealthier portion of the population. They, you reckon, are feeling pretty good right now. Their 401ks and IRAs are looking pretty healthy.
Yeah, I mean, we've got this kind of bifurcated economic situation right now where on one hand, you've got the stock market blowing up. You've got big tech doing really well. You've got a slowdown in hiring in areas where the U.S. is able to provide excellent at providing resources, namely entry level. Like it's real tough to be an entry level college grad right now. Meanwhile, some of the other areas of the market, you know, truck driving, that still remains weak, and then a lot of people that are living paycheck to paycheck. Combination of tariffs, they don't have the stock market wealth effect, and then the U.S. government shutting down. That put a pretty big veil of fear over them. And I believe that we're starting to see some of the economic effects of, that area of the market softening. McDonald's talking about foot traffic being down. The one area of earnings that has not been very good has been fast casual and fast food. That's indicative of, the bottom portion of the U.S. buyers softening up.
What about Bitcoin? Let's have a look at a one-year chart for Bitcoin. It's an important indicator, you think, of the willingness of investors to speculate and take on riskier assets?
Yeah, I mean, if you look at Bitcoin, it is the ultimate signal of whether the market has a risk appetite or doesn't. It is not a uncorrelated asset like gold is, or some of the or bonds. Bitcoin and the NASDAQ 100, not perfectly correlated, but certainly in boom and bust times, or you're going to see those two correlating pretty well. And so the softness in crypto that we've had over the last few weeks and its failure to really get any legs back tells me that there may be something else going on here. Could be a combination of people having seen the weakness and looking at when they bought Bitcoin and selling a little bit. But I think it's also a little belt tightening and a little bit of fear around the treasury market trade that has really pumped Bitcoin these last $30,000 or so. And again, when people have fewer dollars to play with, their crypto is really a draw to younger folks. Kids in college, kids freshly out of college, when they're feeling like they're a little bit, tighter in the belt, what's an area they're going to be buying a little less of? That's going to be crypto. So I think it's an excellent judge of whether you can believe market rallies or sell-offs. If the market is up and Bitcoin is soft, don't trust the market.
That's interesting. So when the market is up and Bitcoin is soft, be wary of the rally in stocks. That's an interesting...
we used to use the Russell 2000 for that indicator, but Bitcoin's kind of taken its place. I actually think it's a better indicator of how much momentum is in the market at any given time than just about any index out there. So if you want to know kind of where U.S. markets are living, crypto's the place to look.
Just finally, do you think there will be a Fed rate cut in December, even though Jay Powell seemed reluctant at the last announcement?
Yeah, I was surprised he poured so much cold water on that. We're going to get CPI this week. We're going to get some of this BLS data, but you look around at what's coming out of corporate America, the amount of layoffs the U.S. government has started, the U.S. companies are starting to enact. UPS, Amazon, you name it. That tells me that companies are tightening belts, and we may need a little bit of some looser rates. And I think the market hasn't mispriced. If there is an opportunity for the market to really kind of take off, it's going to be the odds of that rate cut going up and up over the next few weeks. That could give some life to the market, and that rate cut in December could lead us into a Santa Claus rally. Now, if I'm wrong and the Fed decides to hold, I think December is going to be a rough month for markets. We've already seen what taking interest, a potential, a certainty of a rate cut down to maybe we get a rate cut can do to markets. Taking that fully off the table, I think we end for a rough end of the year. It goes back on, Santa Claus rally is on, and we might even run to 7,000.
Okay. Mark, thank you very much. That's something to watch out for, all right? Really appreciate it. Thanks a million.
Thank you.
Mark Sebastian, founder of Option Pit and Chief Investment Officer at Karman Capital.